So the Federal Reserve came into this year a little nervous about the economic outlook, and everything that's happened since, particularly the war in Iran, is only going to heighten their sense of caution.
We've got to recognize that inflation has been, very sticky for a period of time. The basis for cutting into that is not 100% clear to me yet.
The Fed is not going to cut interest rates this week at its meeting, but it will give us some clues to how it's thinking about this big price shock and energy shock that's moving through the economy. The Fed is going to be thinking about the war in Iran from two perspectives. One is inflation and the other is unemployment. And because it's not clear how those things balance out, that's a great reason that the Fed is just going to kind of sit and watch. The Fed has its interest rates right now at 3.5 to 3.75%. That's not especially high in historical terms. The interest rate right now is in a relatively neutral stance. It's not really holding businesses back. So Americans who have been looking to the Fed for some relief from high mortgage rates, high credit card rates, and auto loans and other consumer rates are probably going to be disappointed. The worries about the war in Iran have helped increase those expectations for inflation over the next couple of years, and that has seen the 10-year Treasury yield rise. This is an important benchmark interest rate that does help set those credit card and mortgage rates. And even if the Fed says it might cut, those rates could stay steady or go up. That's happened before, and it could happen again. This Fed has been through big energy shocks before. Back in 2022, after Russia invaded Ukraine, oil prices went up way higher than they are right now. And the Fed said it was really worried about them.
The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation.
So the Fed generally takes energy prices out of the inflation measures that it looks at. It looks primarily at something called core PCE, which looks at the costs of things in the economy without food prices and without energy prices, because those things tend to move up and down pretty rapidly. What we saw most recently, this measure of core PCE was up kind of high. In fact, it was up higher than the main headline PCE reading. What it showed us was at the beginning of the year, services in the economy were getting more expensive while energy was getting less expensive. Even though the Fed tries to kind of squint and look past energy inflation because it's so volatile, they're going to be worried about what is happening here, especially given the rest of the backdrop and the fact that inflation is still above its 2% target. We're going to hear this week from the Fed about its economic forecast for the coming months and years. Right now, it looks like we might get somewhere between 1 and 3 interest rate cuts later this year. But if the Fed starts worrying about the economic outlook, then those cuts could disappear. Incoming potential chair, Kevin Warsh, he has said that the Fed really ought to ignore these energy price considerations. So we may find out if those criticisms are resonating in the Fed now. Warsh is a very different guy from Powell. And for one thing, he's very likely to come in suggesting they ought to cut interest rates very quickly, whereas Jerome Powell very famously has been in a kind of tug of war with the president over whether or not interest rates should go down.
Jerome Powell today is now bathed in immunity, preventing my office from investigating the Federal Reserve.
Kevin Warsh still needs to be confirmed by the Senate to be the next chair of the Federal Reserve. And there's a big hiccup in that, which is that a couple of Republicans, most notably Tom Tillis, a retiring senator from North Carolina, has said he's not going to vote for any Fed nominees until a criminal investigation into the current Fed and its chair, Jerome Powell, are dropped. While all that unfolds, it's basically going to be impossible for the Senate to advance any Fed nominee, including Kevin Warsh. And so the timeline for getting this resolved is really unclear right now.